Many people hear that time in the market beats the timing the market, suggesting that if you stayed invested for the long term, you will see gains. While this advice sounds solid, it's more complex than it appears. When you enter the market, can greatly affect your returns. History shows that some decades have resulted in poor and even negative returns despite long-term investments. Okay, so in this video, I'm going to talk about how, looking into the history, we can identify there are some decades where literally we have zero gains. Forget about the inflation-adjusted returns, zero gains in nominal terms. That will help you to strategize your investment portfolio going forward in the future. So let's get started. So if you get any value out of this video, give me a thumbs up and subscribe, because this will tremendously help my channel to be picked up by the algorithm. So the key flaw in the time in the market strategy is that it assumes that the market will eventually go up. Okay. However, history shows that there have been periods where the market didn't recover for decades. Let's take a look at some of the examples. So we're going to use S&P 500 as a proxy and look at what are those decades back in time where we have seen almost zero growth in nominal terms. So number one is Great Depression from 1929 to 1954. In that period, the market lost 86% of its value, and it took 25 years for market to even come back to its pre-crash level. So imagine if you invested into 1929 in S&P 500, you would have seen zero growth in nominal terms in the next 25 years. Okay, let's take a look at another example. 1970s stagflation between 1968 and 1982. During that period, S&P 500 delivered 14 years of flat or negative returns when you adjust for inflation. This period was marked by high inflation and slow economic growth, hence it is called stagflationary period. The third example I'm going to share with you is the dot-com bubble. After the dot-com bubble burst in 2000, the S&P 500 took 13 years to recover. Imagine if you have purchased stocks in 2000, in the next 13 years, you would see zero gain, nada. So ask yourself, if you follow the strategy from those financial gurus that, hey, you just buy S&P 500 and DCA it over the long period, you're going to get some gains. Well, not necessary. If you follow the history, you realize that there have been some periods where we have literally no growth for 25 years, and we don't have time to wait for 25 years before we can see any gains and then adjust for inflation. So what is next for this market? Well, as of 2024, we have seen after one of the aggressive tightening cycle, the market has even gone bananas. Okay, S&P 500, NASDAQ, Dow Jones, cryptocurrencies like Bitcoin all-time high, gold has gone all-time high, and that's all happened while the central banks were running tightening cycle. And now start cutting rates, easing their monetary policy, easing their financial conditions. What do you think is going to happen next? Well, we should consider three scenarios. Number one, the stocks are already all-time high. Okay, the US stock market is all-time high right now. And in that period, in that scenario, when the central banks are cutting rates, there are two scenarios. Either the market will go further bananas, or the central banks are seeing the stuff is going to hit the fans, which is why they're cutting rates, which is not visible to the retail investors. So those retail investors will get sucked in while the smart money will pull out. So there could be a big crash coming, who knows? Number two possibility is we are seeing global tensions rising everywhere. Okay, Middle East crisis, Ukraine war, rising debt level, and uncertainties across the world will definitely create a very risky environment for investment to continue flowing. While interest rate cuts are always going to create a momentum for asset markets, but this could also be inflationary, and with the rising debt, things may go south. Okay, so consider these scenarios before you actually put your money into the market. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and it allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. Now, what we should do? Well, if you look at the traditional investing strategies like 60-40 portfolio diversification, that worked for the boomers, okay, in 1970s and 80s, but definitely it's not going to work for us, at least for the Gen Zs and Gen Xs. Why? Because the bond is yielding literally nothing, and in an inflationary scenario where the inflation is running above 3%, that return that you get on the bond is literally nothing. And even in the stock market, there are a handful of stocks that are responsible to generate more than 10% returns, not the entire market. So you have to pick and choose those individual stocks in order to maximize your return. You cannot just blindly buy SPY. So if you are a Gen Z or Gen X, so what you should do? So you should look outside of the traditional investing strategies. Like, forget about 60-40 portfolio, forget about buying S&P 500 blindly and DCA it for the next 25 years, because what happened in the last 30 years may not guarantee what's going to happen in next 25 years, because right now the market is being exploded with AI. Okay, so we don't know what's going to happen after 6 years, after 2030, when the AI will take over pretty much. Okay, so the investing world that we see is going to be completely changed. So you have to be smart in terms of how you have to invest your money to maximize your return. So invest into companies who are actually putting a lot of focus in terms of getting the AI into the mainstream. Look at healthcare, look at financial sector, look at manufacturing. Identify those companies who are actually front running the AI race, and those companies are going to generate a lot of growth using the AI. While the AI is going to be the engine, the fuel behind that engine is going to be a lot of energy. Okay, so the fossil fuel based energy is not growing. So the governments and the companies are not investing into fossil fuel based power plants. So you have to look into solar or nuclear. We have seen big deals being signed between Amazon, Google, to fund the nuclear reactors to produce the energy that is required to operate those AI data centers. Identify those companies to invest into it. And if nuclear is going to be the future, you have to invest into commodities like uranium. And diversify yourself from the traditional investing strategies. Look into global markets outside US. Look into Dubai, Singapore, Abu Dhabi. Look into commodities like uranium, cryptocurrencies, Bitcoin, definitely. If you buy real estate that is going to generate positive cash flows. Okay. In addition to Bitcoin, you have to look into those projects which is going to further advance the overall DeFi infrastructure. Okay, there's a lot of work happening in the DeFi space. You should keep an eye on that and invest into those projects as well. And stay flexible. If you think this strategy is not working, make a pivot and change your strategy, because things are going to be very volatile and things are going to be very fast paced as well. So you have to understand you cannot just close your eyes and buy S&P 500 and sleep for the next 25 years. That may not happen for you. That might have worked for the boomers, but it may not happen for you. So if you get any value out of this video, give me a thumbs up and subscribe, because this will tremendously help my channel to be picked up by the algorithm. And I also send out newsletter on weekly basis. Check it out. Let me know what you think about that, and I'll see you in the next video. Take care.